Hi, it's Graham Bibby here, and we're getting towards the end of November, can you believe it? Not far from 2017. It's the 28th of the 11th, 2016. And I thought today, post-Trump president-elect, I'd give you a bit of an update on what the markets are looking at the moment. We must bear in mind that this is the honeymoon phase, it's not actually in power yet, so markets are reacting on projections of what's going to happen, I guess. That's why we have to be a little bit cautious, but I do believe there's some great trends coming through. And for those of you in my Insiders Club, I'll be giving you my views. I put together an article called Trumped ED, the ultimate art of the deal, and that references the ultimate art of the deal is becoming president, and it's going to usher in a new era of investing. The old ways didn't really work, and we've had a lot of volatility over the last year and a half, but I really feel that prolonged trends are going to emerge, and rotation, investment rotation. So you can't just buy and hold and keep the same old portfolio, because you're going to miss out. At best, you're going to miss out on very good returns. At worst, you're going to be in the wrong areas. Might actually end up losing money. So let's have a look through. I know mainly in overseas and expatriates overseas got big weightings in emerging markets, and they've been hit more than ever, because it's not about blue chips or big markets against emerging markets or emerging markets. It's about when you should be where. So let's have a look at where we are right now. So I've got the Dow Jones Industrials in front of me, and this is post Trump election, and that is the one-way rise up. We were breaking down here below 18,000. And it's a crazy day, the day of the election, and the market's doing exactly the opposite of what most pundits thought. And a lot of big hedge funds had raised a lot of cash just in case Trump got in, because they thought the markets would have a massive sell-off, and they've done the opposite. So always expect the unexpected, and that is certainly the unexpected. The Nasdaq, the tech index, was really in trouble before Trump got in, and again a one-way rise. But this is not what you should get. You see is a bit of rising, profit taking, and then you've got a trend. But let me just take you quickly around the world so you can see what's going on. So this is interesting, because China, this is the Chinese stock market, the Shanghai index, has also been benefiting, and perhaps it's benefiting even more than the US, because if the US is really going to undertake massive infrastructure plays, that's going to boost the economy, that's going to boost jobs, that's going to boost employment, that's going to boost income, that's going to boost spending, that's going to boost commodity prices. So if you're spending more, you've got more. A lot of the goods that the US people spend their money on are from emerging markets, and a lot from China. So maybe that's why the Chinese index is doing so well. Funnily enough, the real estate index, and Trump's a real estate man, has been not in good territory. So it was falling before Trump. It kind of maybe stabilized now, but it was in a sorry state before he came in. Then we look over here at the S&P 500. Again, similar to the other two indices, it had broken down here below this support level fractionally, and it's turned on a dime, gone straight up. Not a trend, but gone straight up. And we've had a lot of volatility. I mentioned it time after time since 2014, a lot of volatility. Trends haven't really been prolonged. In Australia, huge amount of volatility all over the place, very difficult. But again, we've got this uptrend, and the reason you've got this uptrend is because if we go here, this is steel and iron ore index, which have been doing well anyway, and in post-election it's been very strong, because if you're going to do all this infrastructure play, it's going to be good for steel, iron, copper, etc., aluminium. So think about the Australian economy. If those prices continue to rise, production will increase, and that will be good for Australia. And then certain areas in Australia, you could look at property plays, especially in WA, that's really been hit. Interestingly enough, airline stocks, which weren't doing great, have taken off post Trump. And that's because if you're more prosperous and there's more business going on, there'll be more flights, etc., moving people around the country. Now, some really strange things have been going on. Don't forget, once Trump gets in, this is all about the art of the deal. So here's copper. Bam! Took off big time. And one of the stocks which gave a buy signal in the Insiders Club is Freeport McMoran. And that's taken off the same way. It's broken out of... You see this base? It broke out at the beginning of 2016, then consolidated, wasn't looking that great, and now after that consolidation period we're in a brand new uptrend with upside of up here somewhere, so that's looking quite good. Now Trump has said or indicated that he's looking to put 45% tariffs on imports, but don't forget, he is the ultimate deal maker. So where do you start negotiations? You go to an extreme and then you can move back from there. I'm just looking to show you this index. This has been a bit of a roller coaster here. This is the Philippines stock market, and this is what has been happening before the election and after the election. And Asian currencies and a lot of emerging market currencies are at or near 10-year lows, and the markets haven't been doing much better either. So I believe the first play is infrastructure. If banks are going to do well, the pharmacy companies are going to do well, construction, cement, commodities. And then when the economy is picking up with all this GDP growth, economic growth, this stimulus to the economy, people are going to have money to spend, and then they're going to be buying goods. And now Asia's got cheaper. Asia's got its own infrastructure plays going to go on, but Asia's got cheaper. So then these downward beaten indices will turn up and will present very good buying opportunities. But you've got to be tactical, you've got to be strategic, you've got to have your eye on the globe, and there's 46 world markets in the globe, in my globe anyway. I look at 46 countries, and I look at sectors for rotation, and I look at commodities, and I look at currencies. So currencies are making these markets more advantageous. Now, I just want to show you something else here, because if I can find it, bump this one. This is sterling, UK currency against the dollar. And look at this. Wow. Jeez. Since 2014, sterling has absolutely crumbled. Now, you could say that's bad news for the UK. Well, it is in the short term, but it's making the UK much more competitive. It's making moving there much cheaper. It's making goods from there much cheaper, making the whole country more competitive. So you can't afford, in this day and age, to have a buy, hold and pray diversified portfolio, because things you can't imagine can happen. Gold, which had been very strong since the breakout in February of this year, has been crumbling, and you'd think now Trump is in and inflation's going to pick up and commodity prices are going to pick up, gold and silver would be going up, but they've been actually falling. This is the sell-off when he got in, and they've been really falling. So this will pick up later on as inflation picks up, but the US needs to rebuild its infrastructure that's been crumbling for years. Maybe Mr. Trump's the man to do it, because no one else has been prepared to do it. And if he does that, then I believe down the road, when commodity prices are rising and inflation is rising, gold and silver will rise. Also, they've got massive debt problem, as we all know, in the US, and the only way anyone's figured out they're going to get out of it is to reinflate the economy. That means inflation, and what he's doing is looking like inflation. We've got to let the inflation genie out of the bottle. And what I mean by reflation, if the economy gets bigger and bigger and bigger, then really growing, the GDP is growing, the debt portion seems a lot smaller and will become less significant in relation to the growth of the overall country's economic prosperity. So anyway, for those of you not in my Insiders Club out there, you can see that you really need to have some assistance here. This is not being your investment advisor. This is not being your financial advisor. This is providing you with education and knowledge about what's going on where, and where there's buy signals and where there's sell signals. And if you'd like to know more, you could email ruth@grahambibby.com and be happy to see if we're a fit to work together. So Graham Bibby on the 28th of November 2016. Took me 11 minutes, but I've gone around the world saying hope 2 days left to the end of this month. Hope you're getting ready for Christmas and the new year, and wishing you all the very best to you and your family, and looking forward to a prosperous 2017 under the ultimate deal maker, Mr. Donald Trump. Bye bye.